Warren Buffett and Charlie Munger, why we despise Bitcoin. Warren Buffett, the Oracle of Omaha, has made his stance clear. He's no fan of Bitcoin. Buffett and his long-standing business colleague Charlie Munger feel the cryptocurrency's value is mainly speculative, referring to it as rat poison squared. Whether you're a Bitcoin advocate or skeptic, following up on the arguments may lead to better educated crypto judgments. So let's get into it and deconstruct why these Wall Street heavyweights despise Bitcoin so much. Big guns blasting Bitcoin. Warren Buffett likens Bitcoin mania to lottery fever. His comparison runs more profound than many realize. Behind the soundbite lies his view about investor psychology and the role of chance in the markets. Buffett sees Bitcoin as nothing but speculation. As such, he notes that the recent surge of state-sponsored lotteries has tapped into the public's innate hunger for swift riches. With online channels providing round-the-clock accessibility, placing bets is only a click away. This convenience has opened the floodgates to compulsive gambling on an unprecedented scale. In his opinion, the same forces come into play with Bitcoin's dramatic price swings. Investors are irresistibly drawn in by dreams of attaining quick wealth and status from this novel asset class. The prospect of massive near-instant gains overrides any rational assessment of risk, the classic markings of a speculative bubble. His view is that chasing such ephemeral riches often ends badly. Without underlying value, speculation is a fool's errand. Bitcoin gets rid of cantillionaires. While Warren Buffett dismisses Bitcoin as merely a speculative asset, he must be made aware of the growing utility behind the cryptocurrency. At its core, Bitcoin functions as a decentralized digital currency, allowing peer-to-peer transactions. Bitcoin enables accessible payments and remittance transfers across borders. Bitcoin is uniquely valuable for quick international payments and those without access to traditional banking infrastructure. The fixed supply cap of 21 million Bitcoins builds scarcity akin to precious metals. This helps Bitcoin hold value over the long term independently of governments and institutions that manipulate fiat currencies through uncontrolled money printing. It's hardly shocking that vocal Bitcoin critics Warren Buffett and Charlie Munger fail to grasp cryptocurrency's appeal. As establishment power players, these billionaire investors practically epitomize the growing wealth disparity fueled by modern central banking policies. Over decades, cascading quantitative easing programs and recurring bailouts have enriched banking elites and significant players like Buffett, who dominate public equity markets. Such monetary manipulation steadily transfers wealth from the average citizens to entrenched cantillionaires through money debasement. Contrast this with Bitcoin's transparent and fair programmatic minting that resists such unequal bifurcation of wealth. Yet Buffett and Munger seem oblivious to this perspective, occupying an insulated bubble of privilege that clouds their views on crypto. While their business acumen still needs to be improved when it comes to decentralized digital currencies, these icons may need to be more entrenched in existing frameworks to perceive the forces driving adoption. Crypto shit or crypto gold? In a recent Wall Street Journal article, Warren Buffett expressed his support for banning cryptocurrencies. Charlie Munger didn't hold back when sharing his opinions on crypto, referring to it as crypto crapo and crypto shit. He directed these blunt criticisms toward digital currencies and dismissed their supporters as individuals chasing after the latest speculative fad. These harsh remarks made headlines and reinforced Munger's reputation as a curmudgeon. His primary objection to cryptocurrencies revolves around their perceived lack of historical utility. Munger highlights the essential role that national currencies have played in facilitating commerce and building civilizations over time. He views replacing these well-established trade means with speculative cryptocurrencies as absurd, akin to attempting to substitute air, a regressive move towards inconvenience. The situation underscores a notable case of cognitive dissonance. Even individuals like Munger, who have extensively discussed mental errors, can find themselves holding contradictory views. If I were in their shoes, I would refrain from actively criticizing Bitcoin, given their financial backgrounds and investments. My respect for Munger and Buffett, which I have held for many years, has gradually waned. They appear to be clinging to an outdated form of civilization, resembling dinosaurs in the financial landscape. While their expertise as investors is undeniable, looking back, it becomes clear that their approach, known as value investing, needs to adapt and become more effective. This approach heavily relies on an older economic model characterized by monopolies and oligopolies, which were once prevalent in the United States. In contrast, Bitcoin represents the hardest form of money the world has ever known. Great civilizations have been historically built on the foundation of hard money. Munger's life work involves investments in junk food companies and major banks. However, truly great civilizations are founded on something other than fiat money, which is essentially how Buffett and Munger accumulated their wealth. Instead, they're built upon the principles of hard money, epitomized by the gold standard in the past and the emerging Bitcoin standard in the future. Consider Europe during the era of the gold standard, particularly the Belle Epoque at the end of the 19th and early 20th centuries. This period, often called the Golden Age, was marked by remarkable advancements in art, music, technology, lasting peace, and economic prosperity. It serves as a shining example of what a great civilization can achieve. This starkly contrasts the disposable, junk food-driven civilization that Munger and Buffett have contributed to and profited from. Conflict of interest. A significant portion of Munger's wealth has been amassed through investments in financial companies, particularly major banks and junk food companies. The irony is evident when criticizing Bitcoin as contrary to civilization's interest, while profiting substantially from investments in companies like Coca-Cola. Although acceptable in moderation, Coca-Cola has been widely criticized for its adverse impact on health, particularly in developing regions such as Africa, India, and Mexico. For instance, there have been reports of water scarcity in Mexican towns juxtaposed with easy access to Coca-Cola. Similarly, India has grappled with rising diabetes rates associated with sugary products like Coke. Munger once delivered a famous speech proposing a thought experiment on creating an addictive drink with salt to replace water. While intellectually stimulating, the idea appears concerning when considering the health consequences of sugary beverages. It's important to note that Charlie Munger's investment portfolio includes companies with a history of issues, including discrimination. Another significant investment Munger and Buffett share is Kraft Heinz and its predecessor, Kraft Foods. These companies have been associated with producing heavily processed and arguably unhealthy food products. Describing some of these products as food might be an overstatement. Wealth, influence, and Bitcoin skepticism. Moving on to Buffett's investments in big banks, it's worth noting that he has profited substantially from U.S. banks. Thus, adopting a moral high ground stance is arguably hypocritical. The issues surrounding major U.S. banks, especially in the past 2 decades, are too numerous to mention. However, there are articles about how Buffett profited from government bailouts. There is public documentation of the extent to which Warren Buffett, Berkshire Hathaway, and Charlie Munger were invested in the banks and other financial institutions that benefited from government bailouts following the 2008-2009 financial crisis. The companies on the list include Wells Fargo, Goldman Sachs, and Bank of America, all of which have been embroiled in various scandals. The conflict of interest is evident when figures like Munger and Buffett advocate for the importance of these bailouts, even as they held significant stakes in the bailed-out companies. For instance, Wells Fargo faced a $3 billion fine for unauthorized account openings, another major investment linked to Buffett and Munger. It's essential to remember that these investments and affiliations have shaped Warren Buffett's wealth and vision of an ideal society. Furthermore, there has been ongoing discourse about the seamless transition of individuals between government regulatory agencies and Wall Street, where professionals frequently move back and forth between these sectors. This interconnectedness is particularly evident in the significant number of former Goldman Sachs employees who have held government positions, underscoring a strong correlation. Given this context, it's unsurprising that Buffett and Munger hold a negative view of Bitcoin. After all, the 2008-2009 financial crisis played a pivotal role in highlighting the need for an alternative to the existing traditional banking system. From tech critics to late-stage adopters. Meanwhile, Warren Buffett and Charlie Munger might not be the most reliable sources regarding technological developments. They have held a bearish stance on the internet and the entire internet revolution since the early 1990s. It wasn't until 2015 or 2016 that Buffett recognized the potential and made smart investments in Amazon and Apple after years of criticizing tech companies. Buffett and Munger are not known for being at the cutting edge of technology. They gained prominence as brilliant investors when the U.S. was dominated by large, anti-competitive, monopolistic companies that had a stronghold on consumer choices and job opportunities. The economy in the 1950s, 60s, 70s, and 80s was characterized by giant corporations, including newspaper companies that Buffett and Munger benefited from, junk food companies, and banks. The internet revolution has disrupted this closed economy by introducing competition and challenging these traditional players. While it has created its monopolistic issues, it has also opened up opportunities for new players. The traditional financial system, newspapers, and even banks feel the impact of fintech and the Bitcoin revolution. However, their track record in advising on technology-related matters could be better, and their investments have underperformed compared to the Nasdaq and S&P indices for several years. Their dismissive remarks about Bitcoin, such as likening it to rat poison, reflect their bias against disruptive technologies. Indeed, figures like Buffett and Munger, who have reaped rewards within the traditional fiat financial system, might express little enthusiasm for Bitcoin. Nevertheless, focusing solely on the speculative aspects that influence short-term Bitcoin price fluctuations overlooks the substantial functionality that drives its adoption. Bitcoin serves as a currency and a financial network, offering utility ranging from facilitating microtransactions to a robust hedge against long-term currency devaluation. The blockchain genie is out of the bottle, and the utility it offers continues to unfold.